Good morning, everyone. Welcome to the discussion on the business requirements and the legislation that governs funeral parlours. My name is Zintle Ngobo. I am an analyst from the Financial Advisors and Intermediaries Department within the Conduct of Business Supervision Division of the FSCA. The Financial Advisors and Intermediaries Department supervises the conduct of authorized financial services providers and their compliance officers in accordance with the FAIS Act and subordinate legislation. The team conducts both desk-based supervision and on-site supervision on the financial services providers to ensure that FSPs are sound and efficient and that consumers are protected. The team is responsible for the analysis of financial statements, compliance reports, irregularity reports, exemption request, lapse request, and conduct-related complaints and inquiries. We also have the micro institution department, which is accountable for supervising the market conduct of micro insurers and financial services entities operating within the micro insurance or excess products environment. Excess products include micro-insurance policies, funeral policies, including funeral policies sold by traditional insurers, and products offered by the friendly societies, cooperative banks, cooperative financial institutions. As the authority, we are pleased with the positive response to the workshop, and we look forward to making this a meaningful and insightful session. The purpose of this workshop is to unpack the legislation and guidelines around the importance of being authorized, specific regulations for funeral directors and business, compliance requirements, underwriters requirement, and policy admin and data requirements, premium collection and remittance to the insurer, claims handling, and payment to beneficiaries. We are honored to be joined by our manager, Ms. Shireen Notir, who will welcome you to this workshop. Over to you, Shireen.
Good morning, Zintle, and everyone in the audience today. We are very pleased to have so many of you participating in the workshop. As Zintle has explained what the purpose of the workshop is, we are going to be talking to those of you who are involved in the funeral insurance industry. We are very pleased that so many of you are interested. And as Zintle has also said, this is a joint workshop between the Micro Institutions Department and the Financial Advisors and Intermediaries Department. We see this as the regulator working with the industry to make sure that we look after the fair treatment of clients. Customers' priority is always at the forefront of our minds. As a market conduct regulator, we are very interested in making sure that the industry, the regulator, and the consumers are solidly protected, and that we have systems and processes in place that ensures a good, seamless service delivery to clients, both from the inception of a policy right through to claim stage. And that is what we're going to be looking at today, is the whole life cycle of participation in the funeral insurance industry specifically. We are also joined by a colleague from our Licensing and Business Center department, who is going to be finishing off today talking about the beneficial ownership project. So for those of you who have some questions around beneficial ownership, please don't leave the workshop early, because we are going to be finishing off with a section on the beneficial ownership project. So also thank you to all of our colleagues across all three departments who are participating in today's workshop. I am sure that you are going to find this of great benefit and thoroughly enjoy it. And then just on a last note from us at the FSCA to everyone in the audience, may you have a very safe and lovely festive season. Please enjoy it and come back safely in the new year so that we can help you with more workshops on your questions. Thank you so much for attending. Zintle, over to you.
Thank you so much, Shireen, for the warm welcome and for framing the conversation of the day so impeccably. The presenters for the day consist of our senior analyst and specialist analyst, Valentine Malaji and Sidwell Francis from the Financial Advisors and Intermediaries Department and the Micro Access Products Institutions Department, respectively. We are also joined by Akashan, as Shireen has mentioned, who is from our Business Process Improvement Unit, who will take us through the beneficial ownership that is required from each FSP. I would like to take this opportunity to tackle the house rules before we proceed with the program. All mics have been muted for the duration of the workshop. Each speaker will go through their section of the presentation, after which we will open the floor for questions relating to the relevant section being covered. You are welcome to pose your questions relating to the slides in the chat box during the presentation, and our esteemed colleagues will respond to your questions on that forum. Questions regarding beneficial ownership will be addressed after Akashin's presentation. We will also respond to some of the questions in the chat box verbally once the floor is open for questions and answers. Please raise your hand in the reaction section of MS Teams, and your mics will be enabled for you to ask your question or to share your comments. Please do note that there may be a lag in the mic enablement. Should this happen, please bear with us. In the event that your mic does not work at all, please pause your question in the chat box. We will also afford you comfort breaks between each speaker for you to gear up for the next speaker. If the questions that are posed relate to the sections that are still upcoming, we will pause the response to ensure that our explanations cover your question. Please note that the workshop is for engaging the industry participants on the subject matter and is not accredited for CPD points. The first session will cover legislation according to the FAIS Act. The second session will cover legislation according to the Micro and Access Product Institutions. And then our last session will cover the beneficial ownership requirements. Without any further ado, I will now hand over to my colleague, Mr. Malachi. Over to you, Valentine.
Good morning, everybody. Can everybody be able to hear me? Okay, my name is Valentine. I will be taking you through the presentation. So for now, I will share my presentation before we start, so you can all be able what we'll be talking about. While we're still on that, I'd like to thank everybody for availing themselves to this presentation. We know it's that time of the year that everybody's about to go home, but for you to be here with us, it makes us very fulfilling that we're doing our jobs very well and to be able to share this knowledge with you. So I'll be covering the FAIS legislation. From the legislation, also my partner will cover the microinsurance part. So on my part, on the FAIS legislation, I'll be covering the importance of being authorized, specific regulations for funeral director and business, compliance requirement, how the FSCA is assisting small business to comply, record keeping, and important obligation. Those will be the topics that will be covered at this point. So the importance of being authorized. The FAIS Act requires that any person or a company or financial service provider to register as an FSP and to obtain a license. This is very important so that our industry can be regulated, so we can be able to make it more professional, that even to find recourse and help through us. So being regulated means that we're able to assist you in anything that you need. And then if you conduct insurance business in South Africa without an insurance license, this is considered to be an offense. And you'll be liable for conviction of that. As anything in life, if you drive without a license, you're not required. So license is a very important product for you to have. So it can show that you're able, it's like, it gives you the, what do they call it? It gives you the authority for you to do what you're doing. And when we give you authority, there are things that we expect from you. One of them is honesty, integrity, and you must be in good standing. Honesty means how you treat your client, how you sell your product to client. And integrity shows the value that you put on the business and the industry itself. And you must be in good standing that in everything that you do, when you're in good standing, even when we call you, you'll be happy to hear from us because you won't have to worry about anything from the FSCA. You'll be in good standing. And if you're doing business, conducting business, there's glitches and there's contravention that happens. But if the contraventions, in the event of breach and contraventions, that you'll be breaking the law, which will be the act that is bestowed upon you. And as your license, that is a requirement for you to be able to adhere to the legislation. So it's also important for us to engage with you because we need to be familiar with the industry and you need to familiarize yourself with us. And then we'll help you with your regulatory requirement and what to adhere to So by being able licensed and for us having this workshop, so we enabling that relationship between the industry and us so we can have a seamless relationship. Specific regulation for funeral director and businesses. Number one, you need to be authorized. This is very important. So with authorization, depend on what you authorize with. There's different types of licenses that you get, and there's different class of business. So for funeral businesses, the class of business you authorize under is subcategory A, and or friendly society business, which is 1.1 and 1.9 mostly. And then the Insurance Act, which is our subordinate act that we use in concurrent with other legislation, says for funeral product below 100,000 falls within funeral class in the Insurance Act. Before the Insurance Act was established, funeral product offering policy benefits between 30 to 100,000 were licensed to operate under long-term insurance subcategory B1. This right now, then, as I said, it will fall under subcategory A now. And as a business, as you operate through your operation every day, there's so many things that changes. Your address, your reps, and then we always advise for FSP, if there's any change in any matter, it doesn't matter what the changes, please send us a profile change so that your profile can be up to date. And this profile change, you should send it within 15 days. This allows us to be able to call you because we have problems where we want to send people's email and then about important things, they don't get the emails because we didn't get the profile change for such information as emails. There are levies that are due. The levies that are due are paid by the FSP, and these levies are paid annually. So they usually get an invoice and then you have to pay the levies. As an FSP, as you work, every business, you must be able to fulfill your obligations. So it's operational ability, where if you sell products, you must have people that when we come to your business, we must get somebody who can be able to assist us. We don't want to come to your business, knock on the door when somebody has died and there's nobody, and then we have to live with the corpse inside the house. So it's very important to have operational ability that when we get to your business, we can be able to find the relevant person that will be able to assist us effectively, and they will know what they'll be doing. And then the person also as well, you need to be able to have people in your business. If you sell any product, as I come to your business, I need to be able to ask you questions that you could be able to assist me with. Because we don't want to get there and you'll be paying a premium for something you do not know. You think you've taken a funeral policy only to find out you took car insurance and you don't even have a car by that time. So if you get somebody who's able to tell you about the product and what it covers for you, that really is very beneficial. There's also compliance requirement, fit and proper requirement. This is one of the most important requirements that will, it's one of the most important requirements because fit and proper defines, it gives you authority what you can do. So the FAIS Act stipulates that authorized FSP must ensure that their key individuals and representatives are, I will state them at verbatim, and then we'll talk to them as we go by. Competent to act and comply with all fit and proper requirements, as well as any other requirement included in the Act. They must have product knowledge and competence. FSP are always expected to be honest and have integrity and to be in good standing. FSP and the representative are expected to operate in the best interest of their client. FAIS also require FSP to be financially sound and not use clients' premium to carry out business operation, to only conduct authorized business, maintain records for 5 years and after the business relation ends. So these are the requirements. I had to state them at verbatim so you can be able to know what are this requirement. When you are fit and proper as a business, you need to be able, one of the requirements, as I said, number one is to know your product. You must be authorized, know your product, be licensed for that product. So when you're authorized and licensed for that product, it means that you're able to offer good service to your client and to your customer at all times. And you must have a key individual. The key individual is a person who oversees the business, who manages the business. This is the person that will ensure that everything is done according to the Act and to the regulation. And your representative, as they sell the product to the client, they must be able to know what's the requirement, what sort of documentation is needed, what the product covers, and what disclosure do they have, and if they're acting under supervision or not under supervision, so that they can be able to represent client very well. Honesty, integrity, as we covered it, as a business, you must be able to say what you're authorized and what to sell, and what you sell is illegal based on your license. That is very important. That's why we require you to display your license so that everybody can be able to see what you're authorized for in the business. And as a business, the biggest people who brings the cash flow is our client. So you must act in the best interest of the client at all times. As a business, to be able to operate fully and meet your obligations, you must be financially sound. And we'll cover financial soundness in detail when we go to the next slide of the kind of financial statement that you're supposed to submit and what's required of that, but we'll cover it in the next statement. And when you do business, it's very important to have documentation, because if there's any legal or any legal dispute, you can be able to say, here are the documents. That's why we require for you to maintain the record 5 years after the business relationship, so that you can have proof that to say you've done this, and whether you're in the wrong or the right. But this is to help you and protect you in case of any repercussions. I'll go into financial statement. So there is a full set of financial statements that needs to be submitted. Every FSP has a financial year end. And then after the financial year end, you have 4 months to submit your financial statement. Those financial statements must at all times be signed by the executive manager, or if you're a sole proprietor, you as the sole prop, you must sign the financial statement. Make sure all financial statements are signed. So the financial statement that you normally have, it's a balance sheet. A balance sheet is the one that has assets, liabilities of the business. And then we have the income statement. The income statement is the one that shows the income that you derived in the business and the expenses that you spend on the business. And there's cash flow statement. Cash flow statement shows how the use of cash has been distributed in the business. Changes of equity is the one that shows change in ownership, or if there's any equity that has been given out during the year. Notes to the financial statement. These are very important, because notes of financial statement give us an insight on what the business has done through the year. If there's any requirement, there was an increase in asset, you can tell us what was the purchase about. So it makes us understand how the business has been using its money and where it's standing now in the current position. Director's member report. This gives us a highlight of how the business plans. It's a strategy to show how the business is going to go forward and what the plan is. So for us as a regulator, because we don't stay with the FSP every time, so this helps us to understand everything, how the business is going. And we advise that every time when you send your financial statement, send the one for the current year and the one for the previous year, so we can be able to see what happened, if the business has increased, the business has decreased, if there's any changes in the business. This will help us understand and will also make us have an insight in the industry, what has been happening in the past few months or in a year. There is also Annexure A. Annexure A, you submit it when you submit your financial statement. I think we'll cover it fully in the next slide. But Annexure A, it's a FAIS notice that was released in 1982 to give exemptions to certain financial providers, which will be 1.1 and 1.9. And this is not an automatic exemption. So the exemption goes by part. It has part A, B, C. So from every part of the exemption that you apply, it will tell you whether you qualify for the exemption or you do not qualify for the exemption. So it's a fairly document that will actually guide you in the exemption, whether you apply or not. And then there's the accounting officer or the independent reviewers report. If you meet all the requirements for Annexure A, meaning your PI score will be less than 350, you can, and your PI score is less than 350, you can submit an accounting officer or independent reviewers report. But if it's not, if it's above 350, then you have to submit a 19.2, which is an audited financial statement. But for the purpose of this workshop, because we're covering funeral parlor, we have to tell you all the information so that you are aware of it. Section 19.3, it's an audit for a separate account. This is applicable to financial service provider who collect premiums. And then if you collect premiums, you have to submit this section 19.3. It's a separate account report. So it can be compiled for, if you meet a requirement for Annexure A, this can be compiled by an accounting officer. And if you don't meet this Annexure A requirement, then it needs to be compiled by an auditor. And also if you collect premiums, there's also Annexure C form. It's a liquidity calculation, which it's available on our website to be completed before you submit financial statements. So this will be the set of financial statements that will be submitted at the end of each and every financial year end to the FSCA. So the Annexure 6, which is Form A, it's completed by the key individual of the FSP. This is the person who's overseeing the operation of the FSP. And then the declaration will be signed by the person who's responsible for finances in the FSP, which will be Chief Financial Officer. So, or the financial person in the, depending on the title, but the chief one, the person who's responsible for finance in the FSP. The calculation of this Annexure C, we calculate its liquid asset. Liquid asset is current asset and current liability. This shows in a period of 12 months, will you be able to meet your obligation based on the financial statement? So that will be calculated. And then there is annual expenditure as defined in the determination of fit and proper. It's the expenses that you incur in that year. So, and then those expenses, you'll divide them by 52. So it will give you the requirement of 52 weeks in a year. So that will be the expenses that you think for monthly. That's how we do the liquidation calculation. And the FSP, by all times, must meet financial soundness, working capital, and liquidity requirement. Financial soundness, for in the purpose of this workshop, depending on whether you collect or you not collect premium, but essentially your asset must be more than your liability. You must have enough cash to be able to run your business for the whole year. Those are the requirements. And that requirement, we understand that in life things can happen. And in that case, we can, based on this workshop, that's why we have this workshop, is to allow the industry itself to be able to apply for exemption for financial soundness. If you do not meet any of the requirements, you can be able to contact us, and then we'll be able to assist you in applying for exemption. And please do this on time. Don't wait for us to come to you, and then after that you want to apply for the exemption. It's preferably you do it before time. Sorry for that. So FSPs also have juristic reps. And this juristic rep is the key individual, and the FSP itself who's responsible for the juristic rep of the business. So there is a table B that is given. So you must make sure that all the juristic rep, they meet the working capital requirement and they meet the liquidity requirement. So it's up to the FSP to ensure that their jurisdiction meet this requirement. So meaning if we want information, will come to you as the FSP for us to give us this information. And then for the category 1, FSP's current asset must exceed current liabilities. So meaning you in the 12 months period of your business, you must be able to meet your obligation. Sorry. Can everybody still see my slides? Okay. Liquid assets must be equal or greater than 52 weeks of annual expenditure. That's what we say. You take your expenses, divide by 52, so your liquid asset must be able to cover those expenditure. How's the FCA is assisting to small business to comply? There are exemptions that are applicable that we give out to the industry to be able to make sure that in case of anything, as we understand, business has ups and downs, so you can be able to communicate with us, and then we'll be able to apply this exemption on your behalf. You'll be able to apply this exemption and we'll be able to assist you. There's FAIS Notice 82 of 2015. This exemption permits FSP category 1. This is dedicated to micro and funeral parlor guys. This exemption permits category 1 FSP that are funeral parlor and that collect clients' premium to submit financial statement drawn by an accounting officer, including the Section 93 report, which has been compiled by an accounting officer. This is the exemption that we give to the Cat 1 businesses that the PI covers less than 350. And there's determination of fit and proper. So determination of fit and proper, you can be exempt from qualification for a certain period of time. So you must apply for an exemption with us, and then we'll give you a period of time for you to be able to complete your qualifications that you can be fit and proper. There's also exemption for regulatory the English, sorry, the tongue twister, regulatory exemption. So for your RE, we can be able to exempt you for your RE for a certain period of time for you to meet the requirement. So you apply to us, we give you a period of time. So for you to be able, in that period of time, to be able to complete the RE exams and be able to submit them to us. There's also exemption for class of business training and product specific training. Everybody in the industry, all reps. So when you're at funeral parlor, so you're exempt for the class of business training and product specific training. You also exempt if you do 1.1 and 1.9. You also exempt from CPD requirement. This is only for those funeral parlors. Now we can go further, record keeping. Very familiar there. So on a general code of conduct, as an FSP, you must have appropriate provider and procedures in place. So if you must be able to have record that you have communicated with a client about the service that you render. You must also be able to, after you have that record, you must be able to store the record, and if required, to be able to produce that record to us, and if the clients need the record, and then you must keep that record safe from destruction. You must have that record at all time. So every client that you have, you must be able to tell us when you got the client, if there's any record, if there was any advice given, what product have you sold them, how much was the product, and which product is that? And then you must be able to keep the documentation to say, this is how I sold the product to which client, at what value, which product. And then you must also be able to give us the information if you require it at any time, specific time that we need it. All this record must be kept for 5 years. So the record that you keep must be kept for 5 years, so it can be retrieved at any time that we need it. So you can use a service provider to keep the record, like an online cloud, so that if we want the record, you can be able to access it at any time. You're not specifically required to keep it in your house or in your office, but you can also use cloud service and other available service so that when we need the document, you can get it. It can either be electronic format or any other format, but the way that you keep the document is that anytime that we need it, we can access it, and you have a period of 5 years for that to keep that documentation. So as an FSP, you must be able at all times to comply with fit and proper requirement on an ongoing basis. Comply with code of conduct applicable to the FSP. This is how you must conduct yourself, how you must talk to client, how you must secure client, and how to run your business. You must comply with the Financial Intelligence Center Act. This is our subordinate legislation, FIC. So you must be able to comply with them. You must keep record of every transaction that you do at all the time. You must submit your report, which is your financial statement. The compliance report now is no longer there, but you will be introducing a new report. But you must be able to keep to submit all this requirement report that's required from us. As an FSP, you must prepare your monthly account. So it's required by legislation that as an FSP, you must prepare a monthly record that in any time that we need to see your financial position at that time, you must be able to produce it to us. You must maintain financial soundness, meaning you as an FSP must be able at any time to be able to be operational when it comes to your finances. Levies are payable annually, so you must make sure you pay your levies. And also, one of the important things, as I said earlier, is for you to update your information, because all the time, for us to be able to communicate with you of any obligations that's required of you, or if you have missed any submission, we go through what we have as a contact information. So by updating your contact information all the time means we're able to get a hold of you and you can receive all communication timelessly. I think at this point, I'll give it to Zintle to handle the question and answer.
Thank you very much, Valentine, for the insightful session. I'm going to quickly just go to the hands. I see we have Lindy.m at Gmail. I don't have, I can't see the name. So your mic has been enabled. Can you just enable on your side and give us your question or comment? Lindy, your mic has been enabled. Please enable from your side and then take the floor. Okay, Lindy, we are moving to the next person. Dumelo, the floor is yours. Dumelo, please unmute your mic and then take the floor. Okay, Dumelo, we're gonna move to Marcus. Marcus, please enable and then take the floor. Lindiwe, you can unmute and then ask your question.
Hi, can you hear me?
Yes, yes, we can.
Thank you so much. I just wanted to find out if we can get a copy of the slides of today's presentation emailed maybe.
Okay, Lindy, where the slides will be hosted on our website. Kindly allow us 2 weeks. So the slides and today's recording will be hosted on the FSCA YouTube channel. That is the today's presentation. And then the slides will be hosted on the FSCA's website. We will communicate once they have been uploaded. Kindly allow us 2 weeks.
Thank you.
Thanks, Lindiwe. Sami, you are next. Please unmute and take the floor.
Hope everyone is well. Am I audible, firstly?
Yes, you are. Yes, you are.
Perfect. I just had 3 points that I wanted to find out on, and these are basically referring to the exemptions. So you guys had mentioned that for the KI and reps, there are exemptions, especially for things like RE. I just wanted to find out, do we have to check for the fees online, or is that something you guys can give to us now?
Sami, you can check online. Unfortunately, we did not put the fees on our slides, but you can check online. Or what you can do, you can just give me an send an email to myself, and then I'll quickly send the fees to you. But then they are on the website.
Perfect. Can I ask if you can just pop your email in the chat?
Will do. Just
Perfect.
now.
And then my second question goes to the general exemption. So look, I do have an understanding as to how it's working and the calculations and liquidity, but I just wanted to find out, in a stance whereby you're starting a business, to say like in the first, second year of business, does that also qualify me to apply for exemption? Because obviously within the first year is usually the incubation period, and there isn't really much to send through to you guys. So would that be eligible for exemption, or are you guys looking for other things? What do we do in the sense whereby you're still incubating in your business?
Okay, Lindy, we do take that into consideration. Oh, sorry, Sami. We do take that into consideration because, I mean, when you are still new in business, I mean, sometimes it's not easy to achieve solvency. So you would be eligible for an exemption.
Perfect. And then for the continuous development program, I just wanted to find out, pretty much just like the same as the incubation period, does that also allow me for exemption? Or is there an actual criterion that has to be filled for exemption when it comes to the CDP?
Okay, when it comes to CPDs, Lindy, where the points depend on the products that you have as an FSP or as a representative or a KI. So we do take that into consideration that maybe you've joined and then maybe you've joined mid-year. So we will apportion that to ensure that we don't penalize you, that you must get like the full CPD points.
So it's dependent on product. All right, thank you so much. I think I am clear for now.
Okay, thank you, Sami. I'll just ask my colleague to pop my email on the chat box because I'm busy handling the hands. Sandy, can you just quickly pop my email on the chat box so that Sami can send an email. Banele, you are next. Kindly unmute and then take the floor. Banele, your mic has been enabled. You can unmute from your side and ask us your question. Okay, Tanya, you are next. You can unmute and take the floor.
Hi, I'd just like to find out, according to Board Notice 194 of 2017, if you registered for 1.9, you are exempt from RE and qualification and CPD, and now they said we have to apply for exemption. Tanya, you are correct. If you are only registered for 1.1 and 1.19, then you are exempted. If there are people who have more products on their license, then they would need to check very carefully because they are not necessarily generally exempted. And then they would have to apply, well, comply with the requirements that apply in terms of the additional categories on their license.
Yeah,
We do have some people who mostly do funeral, but they also have additional products on their license. So I think that just didn't come out clearly in the presentation.
yeah, I think it was just confusing because this is just about funerals. So I just thought,
Yes.
yeah, okay.
Tanya, I understand, but we do know that there are people who do some broader categories as well who are attending today. So my apologies, we didn't make that distinction clear in the presentation. But if you're
Thank you.
only appointed for 1.1 and 1.19, then you have a whole host of exemptions that apply to your situation.
Okay, thank you.
Perfect. Then I'm just going to say that Piet Swart, you can go next.
Morning all. I just want to know about requirements. We must comply with the Financial Intelligence Center Act as well. But why are short-term insurance products and medical aid products exempt from the FAIS requirements with premiums in the tens of thousands, but not us with premiums that are less than 200 Rand? Why isn't there an exemption for category A long-term insurance product service providers, and why must we then be accountable institutions then?
That's a very interesting question, and it's not just about the value of the premiums. It also has to do with the risk at claim stage. So it's the risk of money laundering or terrorist financing from proceeds of a policy. There's been, unfortunately, a number of documented cases where there's been huge fraud that also led to money laundering in the funeral environment specifically. The risk assessment at this stage is that the nature of short-term insurance products doesn't really lend itself to a heightened risk of money laundering or terrorist financing, but it is something that is actually evaluated on a very regular basis. If you would like more details about this, you can pop your details in the chat function, and we can put you in contact with our colleagues who specialize in the FAIS legislation, and they can help you more with this.
Thank you.
Pleasure. Then I'm going to hand back to Zintle for handling the questions.
Thank you very much, Shireen. Tanya, I see your hand is still up. I'll presume that it's an old hand. I don't know if I'm correct. Lindy, you can unmute and take the floor.
Hi, ma'am.
Lindy, we lost you there. Can you please unmute and take the floor?
Hi, ma'am. Is everybody can hear me?
Yes, we can hear you.
Oh, yes, ma'am. I would like to know about the suspension of the authorization number 3 of 2022. Is it possible if somebody wants to renew the license, if the FSP has a contravention of the section 19.2 and 19.3 of the FAIS Act, is it allowed to renew the license on that one and get some clarity? Because they requested the financial statement for 2016 on the 2022 year, and that it's more than 5 years of records. Thank you.
So, Lindy, thank you very much for that question. So if a license is suspended, then it means that something was outstanding. In the situation that you explain now, it is outstanding financial statements. So remember, in terms of Section 19(1) of the Act, you are required to hold your monthly accounting records. And then in terms of Section 19(2) of the Act, you must submit your annual financial statements, which is a compilation of all 12 monthly statements to the FSCA, to the authority. So even if it is quite a few years ago, you are still required to have it available and to be able to supply it to us. You do have an opportunity to contact us and talk to us individually about the situation. So what I would suggest you do is type your details in the chat function, and we will get someone who works specifically with suspensions to contact you and help you sort that situation out. While a license is suspended, you can still rectify the matter. And then if the matter is rectified, your license will be reinstated. Once the license has been withdrawn, then we cannot reinstate the license. Then if you want to function in the financial services industry again, you would have to submit a completely new application. I hope that helps you there.
Okay, another last question, ma'am, I would like to know about my levies because it was due on the end of October. I didn't receive the statement of outstanding financial statement for the year 2022. What must I do on that one?
Okay, in the chat function, just say to us that you want to talk about suspension and the levies, and then we will make sure that people contact you about both of those issues.
Thank you, Shireen. Lindy, I hope that answers your question. I'm gonna move to Deboho. Deboho, please unmute and take the floor. Deboho, you can unmute and take the floor. Okay, Nomhle, you are next. You can unmute and take the floor.
Just want to find out about the financial, because I've been sending the, I was a CC and I changed to PTY and I fill up all the forms. And then they say, because I was a CC, they didn't recognize me as a PTY. So the finance I was sending was on C, or was they were not recognizing them. So I did resend all of them from 2016. But last week, I think I have received the emails 10 times now saying that I've not submitted the finances. I've done it again last week when I received the email. So I don't know how many times I must send it in order for me in order for them to receive them.
Nomhle, I
think I even send the email and I even send the email again and they resubmitted, and I told them that I have submitted. Where I must submit, because I'm receiving emails from different people. So now I don't know which sector is the right one to send all these requirements.
Nomhle, I think we can take this offline because we need to understand what is it that you are submitting, because we must also take into account that when you submit your financial statements, you can submit your balance sheet, your income statement.
Yes,
if there is something that is short, then it is considered as non-submission. So that is why I'm asking that please put your FSP number and then we'll be in contact with you.
Okay, thank you, ma'am.
Thank you very much, Nomhle. Levi Hlongwane, you can unmute and take the floor.
Okay, thank you so much. Just a follow-up on the previous question before this one. I think it was from Lindy, and the response to it. When the license has been suspended, while I'm trying to sort out the issue regarding the financials and so on and so forth, is it possible that the business continues trading as a juristic rep under a licensed entity, while I'm still sorting out the suspension and gathering the necessary information so that I can do my submissions regarding the financials?
Levi, I think it's important that we understand that a suspension, it means you need to suspend all operations. So you cannot operate when you are suspended. You need to solely focus on getting your house in order and ensuring that you submit everything that is outstanding within 3 months, because that is the period that you allow you to sort your compliance issues. So we cannot say you are suspended, but then you are operating. So when we suspend you, are saying you are being suspended from operating. So you cannot operate while you are suspended. Does that help you?
Okay, so I can, no, it's clear enough that I cannot even operate as a juristic rep while I'm still suspended. Okay.
Yeah, because just
Okay.
like high school, let's say you are suspended, you can't go to school.
Okay.
Thank you. Mandla, you are next. You can unmute and take the floor.
Morning.
Good morning, Mandla.
For unlicensed funeral parlours, is there a way we can assist those kind of funeral parlours in being compliant? Because I mean, I've been in the industry for quite some time, and I've noticed that there's a lot of funeral parlours that are operating without licenses. Is there a way of assisting them, or must we appoint them as juristic reps on our license?
Mandla, thank you for that question. So, yes, we do have a way that we assist them. We have a team of people in our microinsurance institutions department that are specifically there to assist entities who either have a license and they're not sure how to retain the license, or entities that want to obtain a license and they're not sure how to deal with the licensing. So if they contact us, we can put them in contact with the team, and the team will support them in the whole license application process, just, navigating their way through it. You also ask whether you can appoint them as your juristic representative. Nothing prevents you from appointing another entity as your juristic representative. But you must understand that when you take them on as your juristic representative, you take on accountability and responsibility for everything they do on behalf of your license. They are not acting as a separate entity then. They become an extension of you. They're lengthening your arm because they are operating as if they are you. So I would advise that you only take on a juristic representative if you are very comfortable that you, as the FSP, as the owner, as the key individual, have the capacity to really manage and oversee what they are doing, because they are acting as if they are you. They are not acting as a separate entity. You must also remember that any clients that they sign up during that period where they are your juristic representative are your clients and are not the clients of that entity. So if that entity then gets their own license in the future, those clients remain your clients. And you can't just automatically move the clients to the juristic representative who then become an FSP, because the clients didn't sign up with them, but the clients signed up with you. So it becomes quite technical in how you deal with it. They also can't go and get their own contracts with insurance companies. You must sign the contracts with the insurance companies. They really are part of your operations. So if you're comfortable that you can manage all of that, then by all means take them on as a juristic representative. But if you're not comfortable with that, then be very careful. I hope that's helped you.
Absolutely, thank you.
It's a pleasure. Zintle, back to you.
Thank you very much, Mandla. Thank you so much, Shireen. Tom, over to you. Please unmute and take the floor.
Sorry.
Morning, Tom.
Yes, I want to just clarify two things. I've been in the industry for 20 years as a compliance officer, nearly 20 years, and there's a lot of confusion that will transpire from the fit and proper requirements, especially Chapter 3 of Board Notice 194 of 2017. I suggest you do a one-pager regarding Chapter 3's fit and proper requirements on Board Notice 194 pertaining RE, minimum qualifications, CPD, etc., because there's confusion. I can tell you that now. Second thing is, Shireen, if you guys can communicate with the FIC regarding the requirements of funeral parlours that must comply with the FIC. It's purely because life insurance business is stipulated in the annexure with the Act, and we acknowledge and we know what we must do regarding FIC, but it's burden. It's a lot of red tape for the funeral parlours, and all I can ask the FSCA is to communicate on a regular basis with the FIC and try and get the funeral businesses and long-term category A exempted. Thank you very much.
Thank you, Tom, for that. So on your first section on the confusion around the competence requirements in Chapter 3 of Fit and Proper, we are actually planning a workshop next year specifically focusing on the competence requirements. So it is certainly something that is on our radar to have discussions around that. So if anyone has any questions that they would want us to specifically answer in our planned communication session, we would gladly include that. And if in the meantime, any entity or a person has individual questions, please reach out to us. We're happy to help you on a case-by-case basis as well. But it is on our radar for a general workshop similar to today's as well. Then on your second question on communicating with the FIC, we do communicate with the FIC on a regular basis. The question of whether funeral insurance should be included or excluded from the schedule is often raised. At this stage, the risk rating, the risk indicators for the country indicates that it actually is an environment that does warrant inclusion. We are very aware that it is not the easiest thing to do, and we will certainly do our best to help guide you through all of the requirements. There is also quite a number of webinars that have already been recorded for accountable institutions, helping you through the various requirements of the FIC legislation. Those webinars are available both on our website, the FSCA YouTube channel, and I know on the FIC website, fic.gov.za. They also have a number of webinars that also have some very useful guidance notes. So I would suggest that people who aren't sure, watch the webinars and also go and read the guidance notes. There's some very practical ones out there. But please continue to engage us around this. Rulani, I'm going to hand the mic over to you. You're welcome to unmute and then you can ask your question.
Right, thank you. And I just want to find out now. So during the first year of the FSP's existence, what could be the most likely penalty or repercussion if we are found to be in non-compliance with the financial soundness requirement? Obviously, finance is not balancing out maybe between, liabilities and assets due to non-activity, while we obviously trying to secure contracts and then with service providers during that time. Also, if we have, say, submitted our financials and then have been advised to give clarity on our financial statements, is there any provision for exemption in the regard, on this regard, or maybe while we get our house in order? That's my question.
Hi, Milani. The first point will be for you to submit your financial statement. And if you don't meet based on those financial statements because it's your first year, you'll have to apply for an exemption. And the exemption is not automatically based on whether it's a first year of business or not. So we deal with exemption based on case by case. So there's no, you apply and then we either grant it to you or not. So then you have to submit that. But the biggest thing first is to submit your financial statement timeously. Once you submit it and you do not meet, you can apply for an exemption, and then we'll consider it and then give you a response on the exemption.
All right. Okay. Can I get clarity on the process of applying for that?
Okay, and give us your email so we can send you the process of where to send the exemption to, because it's a different email. Just pop us your email on your chat section, and then we'll send you a process on where to send the exemption.
100% will do. Thank you.
Thank you, Valentine. Thank you, Rulani. Moriti, the floor is yours. You can unmute and take the floor.
Hello. Hello.
Yes, Moriti, we can hear you.
Yeah. I just need an advice. I got there was this what do I call it? Is a prerequisite to say it's a compliance that you have to disclose the beneficiaries ownership. BO. I think just that I'm offline now. I can't call the name correctly, but you've got to disclose the beneficiaries of the business. I think it's BO or OB. And yes.
Yes, Moriti, I mentioned that the beneficial ownership section will be tackled around 11. So can you kindly stay put, and then you will pose your question thereafter.
All right, thank you so much.
Yes, it's beneficial ownership. We will tackle that as our last session. Thank you so much. Jay De Beer. Thank you, Jay De Beer. You can unmute and take the floor. Okay, looking at our time, since we still have 2 more speakers, I'm going to take 2 more people, and then we're going to have a 5-minute leg stretch, and then we will proceed. So I'm going to ask everyone that has their hand up to kindly pose their question on the chat box, and then we will attend to them. Siviwe Mhlomi, you can unmute and take the floor.
Thank you very much. I just wanted to find out with regards to the underwriters which are underwriting as funeral parlors, what protection do we have from FSCA? Because remember, the clients which signs with us as funeral parlors, we provide their details to the underwriters. But now, the minute you start being unhappy with the underwriter, which underwriters you move to another one. And now what they do is that they would write letters or send SMSs and emails to your client that you have left their department, and now you've moved to another one. And if they have an interest, if your client has an interest of joining them, then they can contact them directly. Is there something that is there to protect us as undertakers on our clients?
Siviwe, that is going to be tackled by the next speaker. So can you kindly hold on to your question? And then if maybe in the presentation your question is not fully answered, then you can engage us.
Thank you very much.
Thank you very much. And I see there's MNCE. You can take the floor and ask your question. MNCE. Solomzi, you can unmute and ask your question. As I mentioned, we are pressed for time, so I'm really trying to rush through.
Hello,
so,
can you hear
okay.
me?
Yes, we can.
Oh, okay. Thank you for the opportunity. I just have a question. I'm a Cat A in the long-term insurance brokerage. That's what I'm busy with at the moment. But I've got interest in joining, like collecting premiums, right? Meaning creating our own product in-house. I don't know if maybe this is the right platform to ask this. We want to start our own product. But we have a problem with the underwriters, because every time we approach them, they ask us, how many clients do we have? How are we going to get clients when we're planning to start? Because that's the reason why we want underwriter, we want to start the product. So how are we going to have clients before we start? So we have a problem challenge when it comes to underwriters. So I don't know, I want to ask, how do you find the underwriter?
Okay, I think your question is very interesting because I mean, as the regulator, we cannot advise you on how to design your product. So I think it's very important for you to get more information on how you'll design your products, have a plan, because again, as the regulator, we cannot be the referee and the player as again. So I don't know if maybe Shireen would like to add on what I've just said.
It is a very interesting question that you ask. It's that, you know, you have a plan, but you don't have clients yet. So maybe if you, because we're not involved in those discussions with the underwriters, but what I just would like to recommend is that if you do your market research with your product development and you can then do a guesstimate based on the number of people in your environment to give you targets. Then if you go and discuss your plan plus a rollout plan, and not just the terms for the plan that you want to underwrite, but also your rollout plan for gaining customers to the underwriter, they might be more sympathetic than when you just go with a product design to them. But if you can also show them your marketing and expansion plan. But we are going to be talking about underwriters after the break. So I think let's go to the break now, Zindli.
Yes, as I mentioned, everyone who has their hand up due to time constraints, can you kindly pop your questions on the chat box? We will now take a 5-minute break. We'll be back at 10:16. Thank you so much for your attendance. We will resume in the next 5 minutes. Thank you so much. Welcome back, everyone. I'm sure you had a 5-minute break to stretch your legs, grab coffee or water. We will now move to our second session, and Mr. Sidwell Francis will take us through the micro access department information. Sidwell, are you ready? Can you kindly present and take the floor?
Thanks, Zintle. Good morning, everyone. So I know Zintle has already introduced me, but for purposes of putting face to name or name to face, I think it's also best that I reintroduce myself. So my name is Sidwell Francis. I'm a specialist analyst in the Micro and Access Products Institutions Department. So it's a very long named department. So normally we refer to it as the Micro Institutions Department. So you'll need to bear with me as I present. I will be referring to the department as the Micro Institutions Department. I'm also joined by my colleague Zolani Mini. I'm sure most of you know him because he's part of the capacity building team that usually presents in the capacity building workshops to the FSPs that do not have compliance officers. So there's those physical face-to-face workshops that they do handle or present to the affected FSPs. There's also virtual presentations that they have with FSPs that have compliance officers as well, where they give an update on the developments in terms of the FAIS Act. So I'll share my presentation, but just for high level, I just want to highlight that as a department, we mainly, our main focus is on the insurers, which are the primary institutions that we focus on. But what we've also identified is that there are certain elements within the Insurance Act and also the subordinate legislation that affect underwrite FSPs. So in that regard, we sort of put together a very short presentation that takes into account those FSPs that are affected, including the funeral parlours. So our presentation, it's quite short, as I indicated. It's basically 8 slides. We focus on the 4 items that are reflected on the screen. So we'll be looking at the underwriting requirements, which focuses on who is the insurer, how an insurer gets to be authorized, so on and so forth. So we'll explain as to what steps are taken for such to be authorized. And we try to sort of put this in a chronological order so that you understand that from an inception of a policy to the claim stage, what transpires, what policy administration takes place, who collects premiums and how those premiums should be collected. And then obviously we'll close off with the handling of claims and the effect on the claimants as well as the FSP. So firstly, let me move to the second slide. So this is the second slide. As I indicated that agenda item number 1 will be looking at the requirements to be a licensed insurer. But the Insurance Act is actually mandated, or it falls within the space of the PA. So the Prudential Authority is responsible for the licensing of insurers. It's not the Financial Sector Conduct Authority. Our duty is to ensure that such authorized entities perform within the prescripts and the requirements of the market conduct. So there will be instances where a licensed insurer would outsource some of its function, including intermediary functions and also binder functions that would be performed by the FSPs. By performing that function, whether as a binder or as an intermediary, it does not necessarily mean that you are an insurer. The risk will still remain with the insurer. So at the end of the day, as much as you engage directly with the policyholders, the risk will still fall within the insurer. You would have your facilitation activities outlined in terms of the intermediary agreement or in terms of the binder function, depending on what agreement you have with the insurer. So now just to highlight in terms of the life insurance business, just to give a background so that we all on the same page, we cannot take it for granted that when you enter into business relationships with underwriters, they do bring this information to you. But we just want to highlight that the life class of business has 9 classes of insurance business, which in terms of the Insurance Act, and specifically for funeral parlours, your business is underwritten under the funeral class of business in the main. And the funeral class of business also has subclasses. So the subclasses will be individual classes or will be a group class that I'm sure most of you are aware of. And as I indicated earlier on, that in the main, our focus is on the supervision in terms of the subordinate legislation, which is the Long-Term Insurance Act and the PPRs. The PPRs is the policy protection rules. So the key factor there is that our focus is on ensuring that the policyholders are protected at all times. But that does not mean that we do not ensure or make sure that the underwriters, they also meet or they comply with the provisions of the various pieces of legislation. As I said, the Insurance Act, that is the mandate of the PA, but in our case as the FSCA, we will zoom in on the Long-Term Insurance Act, supported by the PPRs, which are your policy protection rules. So in this slide, we're basically trying to highlight a very basic sort of relationship that exists between or amongst the 3 parties, where you have the policyholder, you have the intermediary, you also have the underwriter. So as an FSP, as funeral parlours, you would be falling under the FSP, where you have a relationship with the policyholder, which in this instance, you view the policyholders as the client. However, from an underwriter perspective, your client it's a policyholder. They view the intermediary as the client. So there needs to be a governed relationship. So it's a tripartite relationship in a sense that the policyholder may directly engage the underwriter or may engage the intermediary, depending on the relationship and the agreement that is in place. So there are instances where policyholder may not have access to the underwriter, and then it is on this basis that they will go directly or they will go to the intermediary for assistance to perform those intermediary services and do the facilitation, whether in terms of entering into a policy and. But we'll get into that as we explain the functions and the functions that are aligned with the intermediary agreement as well as the binder agreement. So basically, what this tripartite relationship tries to highlight is that as much as there is that tripartite relationship, one party can go directly to the other, depending on the circumstances that will prevail at the time. So as I indicated, the administration of the policy as a whole is conducted through various outsourcing agreements. So you have your underwriter who will enter into agreements with certain institutions, including funeral parlours, who may act as intermediary services providers or as binder agreement holders. So obviously with the binder, the requirements, they're quite stringent in terms of the functions that you do perform. But the intermediary agreement is governed in terms of Rule 12.2.2 of the PPRs that I've mentioned earlier. And within the intermediary agreement, there's quite a lot of clauses and provisions that an intermediary and an underwriter will engage in. That will include the termination process, the dispute resolution processes, and. But key to that agreement is the 4 functions that you see on the screen there. Number 1 is the marketing and selling of a policy. So obviously, before a potential policyholder can enter into any policy agreement with the insurer through the intermediary, that specific product needs to be advertised. And obviously, there will also be in scripts that are read out or telemarketing that are done by the FSPs. In that instance, that's where now the FSPs get to engage and market that specific funeral policy with the clients. That's the first step. Then over and above that, there's maintaining of that specific policy, where you now assist a specific potential policy holder to enter into that specific policy. So by this time, the understanding is that the potential policyholder would have indicated an interest in taking up that policy that would have advertised or marketed to that specific individual. And the next layer, maybe just to swap around, you see number 3 saying claims administration, and we have premium collection. However, I just like to say in terms of chronological order, let's have premium collection coming in as number 3. I just need to change that. But obviously, before one can claim, there must have been premiums that have been collected and paid by the policyholder. So in terms of how the premiums collection is governed, we'll get into that in a slide that specifically deals with the collection of premiums. So this is one of the items that we have identified as a key feature and as an issue within the industry, where now we thought it fit that we present this item. So as I indicated, that the presentation is quite short, but it was focused and zoomed in on the industry issues that we have identified. And how we identify these issues is through when we receive notifications from underwriters, notifications to enter into a new product, notifications to enter into an intermediary agreement with an FSP, or enter into binder agreements with an FSP. That's when we realize that in terms of premium collection, there might be issues that are not properly addressed. So hence we are bringing this presentation to yourself so that this is clarified as to what needs to take place and who needs to play which role, so on and so forth. So once there's premium collection, the final layer, obviously, it's with claims administration. As an intermediary, you have that duty depending on the functions that are aligned to you and the agreement. So obviously, having an intermediary agreement does not necessarily mean that you perform all 4 functions. So the agreement will stipulate whether you perform function number 1, function number 2, 3, or 4. But there might be instances where you perform all those specific functions, so including claims administration. This does not necessarily mean that you are responsible for the payment of claims, as indicated in the second slide. The risk still vests with the insurer. However, you will be assisting the policyholder with the collection, collection rather of the claims. And so you'll be facilitating, ensuring that the policyholder has submitted all the required documentation. So the understanding here is that your role here is to ensure that the claim is not repudiated. It's very important that all the necessary documentation are there. So in this instance, you will be viewed as an expert versus the policyholder, obviously, who might need your assistance. And this is where you come in with that administration and the facilitation process. So then also there's binder functions. This forms part and parcel of administration of the policy. So there's 5 functions that a binder can perform. But again, just as is the case with the intermediary functions, you don't necessarily have to perform all 5 functions. The agreement will stipulate whether you perform the first function, which is to enter into, vary, or renew a policy, or you perform the next 3 functions, which is the determination of policy wording, premiums, and the value of the policy. And the other one, which is the key one, is the settlement of claims under a policy. So the agreement itself will actually explain as to or indicate which functions you are authorized to perform. And as I indicated earlier, this part of the policy administration is very involved, and it requires such a binder holder to have the necessary resources in place So whether it's systems in resources or whether it's human resources, obviously by human resources, we may actually be referring to the actuarial team that has to review the premiums and the value of those specific premiums. Those are some of the resources that will need to be there. So as an FSP who is able to have all those functions in place, then you can enter into a binder functions. And again, maybe I need to stress this. By this presentation, we don't necessarily say that as a funeral parlor or as an FSP, you must enter into a binder function. You don't necessarily have to enter into this one. This is an option that is available to the FSP and the underwriter. And as I said, the requirements, they are quite stringent. There's quite a lot of due diligence that is done by the underwriter to ensure that the binder functions are in place. Then they will send that through to the FSCA, where we'll assess the nature and the scale of the due diligence that they would have performed. But what is important is that with regards to the intermediary agreement, it's very important that if you are going to be performing the functions mentioned earlier, you do have that agreement in place. But with the binder, there's options there. And just to indicate the fees that are applicable in terms of the binder functions, these are regulated in terms of Regulation 3.21 of the Long-Term Insurance Act. And as I indicated, our reference point will be the Long-Term Insurance Act, as we do not supervise in terms of the Insurance Act. So if you're going to be, for example, performing function number A, which is to enter, vary and renew a policy, the maximum fee that you can charge on the gross written premium, it's 3.5%. And if you're going to enter into an agreement with the insurer in terms of function B to function D, which is the wording of the policy premiums, determination of the premium value and the value of the policy itself, then the percentage there will be 5%, which is inclusive of the first function, which is to enter into vary and renew a policy. Then if you're going to be performing a settlement of claims as agreed upon with the insurer, then the value that, or the highest percentage you can charge there in terms of the regulation is 4%. However, collectively, if you're going to be performing all these functions, all the 5 binder functions, the maximum value that you can charge on the gross written premium is 9%. So as I indicated, this depends on the agreement and the appetite that the FSP has and whether or not we have the resources to perform this function. So it's very important that this is brought to your attention such that you are aware what options are there and available for you. And just to touch on the premium collection, and as I indicated, that this is one of the thorny and key aspects. So it's intermediaries that enter into an agreement with an authorized underwriter or licensed insurer. And there's an agreement that they will be responsible for collection of premiums. There are rules that are in place, and as per rule regulation 8.2, there needs to be a separate bank account in place. And I think this is also supported by the requirements of the FAIS Act. I think it's within section 19 of the FAIS Act, but I think the FAIS guys have already elaborated on that. But you do need a separate bank account that is specifically for collection of premiums. So this is not your business account. I think that most of you will be aware of this function. But now, in terms of how you administer that specific separate bank account, is that these premiums have to be deposited within a certain period into that bank account. So for example, if you collect cash premiums from the policy holders, which are your clients in this instance, in terms of the terminology that is used in the industry. If you collect cash premiums, you need to make sure that within 24 hours, within 1 day, that cash has been banked with that relevant bank and sent into that separate bank account as mentioned earlier. And you need to make sure that the premiums are remitted to the insurer within 15 days. By remittance, we mean that the gross premium needs to then be paid to the insurer within 15 days. So the arrangement in terms of how that is done, remember, you will be earning commissions from the premiums that are collected. So at times, the entire book, the 100% book of premium collected is moved to the insurer, then the insurer will pay back the relevant premium amount. Or there might be an arrangement that exists between the FSP and the insurer such that the FSP only moves the portion or remits the portion that is due to the insurer and keeps the commission. So that is something that can be contained or can be provided for in the intermediary agreement. So there's nothing wrong with such a practice. It is permitted in terms of the provisions of the various insurance legislation. But it's very important that we stick within the days that are indicated there. And again, where there's issues with the underwriter, I think there's a question that was raised earlier where now FSPs have issues with the underwriter. I think you have some form of protection where you can raise. Part of our functions as the micro institutions department is to look at the complaints, whether the complaints are coming from the underwriter or they are coming from the policy holders, or they're even coming from the FSPs or intermediaries. We do look into those because remember, the principal in this case will be the insurer. So we'll interrogate the nature of your complaints, whether it's related to premiums, whether it's related to the intermediary agreement. We interrogate the nature of the complaint. We investigate the issues that are there, and the decision will then be communicated to the complainant. Obviously, all involved parties will be given an opportunity to respond to whatever issues that are there. So we do look into that. That's part and parcel of our processes that we undertake as the micro institutions department. And to close off, and as I said, I tried to put this in a chronological order so that we understand that the whole process starts from marketing of a policy, entering into a policy, paying premiums, and then we come to a point where now there's a claim a process where there's a claim from a claimant, whether this can be a policy holder or it can be a beneficiary, depending on who has passed away. As we know, in terms of the funeral class of business, the trigger event is death, and death can either be the death of a beneficiary or death of a policy holder. Hence, the terminology we use here is that we refer to the person who's claiming as the claimant, because we're not sure who's going to be claiming at this point, but to collectively cover everyone. So the claimant can instruct the insurer to pay directly into their account, or they can have an arrangement in place with the outsourced or the intermediary to actually take up that specific claim, and then the intermediary will then pay that specific claim to the policyholder. However, rather to the claimant. However, that is only permitted provided that the claimant has made an indication that such a claim may be paid to the intermediary. It's not a generic activity that is undertaken. It needs to happen based on the instruction that was received from the claimant. And again, another important factor that needs to be taken into account is the provision again in the PPRs. It's your policy protection rules. It's that when it comes to the policy itself, you need to indicate the value of each benefits within a policy. So, for example, if you are writing a policy worth 50,000 and included in that policy are certain benefits, grocery benefits worth 5,000, coffin benefits worth 15,000, transport benefits worth whatever amount. In terms of the provisions of the PPR, a claimant has a right to actually request that instead of providing 5,000 worth of grocery, you may actually advance cash to that specific claimant. Those are some of the provisions that are there in the Long-Term Insurance Act or the PPRs of the Long-Term Insurance Act. So any benefit within a policy needs to be attached with its cash value, such that it allows the claimant to be able to move around in terms of having that converted into cash. So that, colleagues, in a nutshell, is the presentation from Micro Institutions Department. I will then, in this instance, hand over to Zintle to take us through the questions, and then we'll respond to those. Thank you very much.
We're going to start with Jay de Beer. Please unmute your mic and pose your question.
Taryn, I think JDB is from the previous session, so I think let's move to Chris. Chris, you can unmute and take the floor.
Hi, good morning. The question is from the insurer side. I understand about the premium collection on behalf of the insurer. Remittance has to be made within 15 days. It happens, however, in the case of, shall we say, less compliant parlours, probably not people attending today, where those premiums are collected and not paid over to the insurer. And the presenter just said then the insurer is investigated, and yes, that is true. And specifically the insurer would then be asked to show that there were communications sent on lapse and arrears and so on. But the point is, we know that the client, the policyholder, had paid the premium, but for whatever reasons, nefarious or otherwise, the funeral parlour has never paid over to us, the insurer, and we know that it's deemed to have been received by us. My question is specifically this: does the FSCA also protect the insurer and get involved in the investigation of the FSP funeral parlours who do not pay the premiums?
Thank you for that question. So yes, we won't get involved with contractual disputes, but where there is non-compliance with either or both as the FAIS Act and the Long-Term Insurance Act or any other applicable piece of legislation, we will get involved in that investigation. We would obviously ask the insurer in this instance, what have you done to try to rectify the situation, to make sure that it wasn't just a problem from the funeral parlour side or the FSP side, but that there was also good management from the insurer side. But we would get involved in investigating the whole situation. We would look at both parties involved, or even if there are multiple parties, at the multiple parties involved, and where necessary, we would intervene and take action. But all of this is dealt with on a case-by-case basis. So what applies in one situation may not just neatly apply in the same manner to the next situation, because the facts of the situation would be different. But the long and the short of it, we would get involved in the investigation.
I appreciate that. Just very quickly, follow-up question. The premiums that are deemed to have been received by us, so we then have to keep paying the claims even though we hadn't received the premium until such investigation is resolved. Is that
yes. Yes, and that's one of the reasons why there are solvency requirements for the insurers, so that insurers can actually continue to pay the claims if there is an issue regarding the premiums, so that while you are trying to resolve the premium situation, you have the cash on hand to put it very simplified, to actually continue to pay the claims. And it's also very important that an insurer then conducts thorough due diligence before they take on an FSP. So the whole value chain is really important right from the start to the end.
Thank you.
It's a pleasure. Cindy, back to you.
Thank you very much, Shireen. We will now move over to Mpemedzi. Mpemedzi, you can unmute and take the floor.
Thank you, Zinhle. My question is with regards to the premiums and the collection of premiums. So given the fact that it was mentioned that a binder agreement does not absolve the insurer from performing their function, when is a premium deemed to be received by the insurer? Is it when the binder holder or the funeral parlour or the FSP receives it from the client, or is it when the FSP gives the money to the insurer? So when is it deemed to be received by the insurer? Thank you.
Thank you for your question, Mpemedzi. Sidwell, would you like to take this question?
Thanks, Zinhle. That's actually a very good question. because there's no standard a view or provision on that one. But remember, in terms of the requirements, that premium has to be remitted or paid to the insurer within 15 days. However, the client may have already, or the policyholder may have already advanced the premium way before, maybe on the 1st of the month. So it is at that point that we recognize that specific, but obviously as the authority and even the insurer would not be aware, would not know at the time that this has been paid. But I also like to align this to the previous speaker, or I think it's Chris, who raised a question around the premiums as well, in terms of the impact it has on the insurers. So you note that whether or not the premium has been remitted by the funeral parlor or intermediary to the insurer, the fact that the risk lies with the insurer, there's still an expectation in terms of the various provisions of the therefore, by virtue of that expectation that the claim is paid, even though the funeral parlor or the intermediary may not have advanced that specific premium to the insurer, the claim still has to be paid, and obviously there would be investigations that take place. There's collaboration between the Micro Institutions Department and the FAIS Act, and the FAI Department. So having said that, I think maybe we just need to relook into that and give a more comprehensive response. But just to highlight that the fact that there's an expectation of performance on the side of the insurer by virtue of the existence of that specific policy, and the fact that the policyholder would have paid, whether or not the premium has been advanced already, that is neither here or there. The performance is still expected from the insurer. Thanks.
Thanks, Sidwell. Thanks, Zintle.
Thank you very much, Sidwell. Thank you, Mpimeti. We'll now move over to Dimakato. Please unmute and take the floor. Dimakato, you can unmute and take the floor. All right, I will now move over to Kaisers. You can unmute and take the floor.
Thank you. Can you hear me, ma'am?
Yes, we can hear you.
All right. Thank you so much for the opportunity to have an input. I am an FSP. Some of the things that are mentioned here are foreign to me. I have worked with different underwriters. Some are extremely good and they work with you. They don't bully you. They don't want to see you, out of business. They actually take your hand and move forward with you. For me, I haven't interacted a lot with the FSCA, the regulator, but what I'm hearing here in the previous session, I am very encouraged. Mr. Malachi mentioned that their primary objective is to assist, and that I take it to heart. As a small business, I just want to just take you through the process. When people come to source policies from us, there are two types of policies. One is a cash policy at inception. One is a service equivalent policy. So let me just make an example. Somebody got a service equivalent policy in 1990, and it was 3,000 worth at that time, and they got all sorts of goodies and so on. So you can imagine with escalation and everything, how much it is today. And these people are still paying for premiums for 3,000 because they say we have been paying for the last 100 years. So we are not going to increase the cover. You promised that you will give us all those things. We still expect those things. So, I think there are disconnections somewhere, but we need, let me talk about myself. I am still obligated because in 1990 I promised that person that I will give you 1, 2, 3, and I am still giving that person those things, although they are much more expensive today. The cash policy is no problem. Somebody comes and say, I want a 10,000 Rand policy. When a claim comes about, they get their 10,000 Rand. There is no problem. But the disconnection the disconnection that I find here is that me as the FSP, my underwriter says, what day do you want to pay your premiums? I say the first of the month. Some of my clients are only getting their money from SASSA, from different sources on the 4th of the month, on the 15th of the month, on the 25th of the month. When I pay my underwriter on the 1st, I pay for everybody because those people know me. I promised them certain things and they promised me certain things. And we have meetings every now and then with them, say annually, where we slaughter a cow and then we meet and then we have discussions and things like those and so on, and talk about the changes and whatever and so on. So for me, my obligation to my clients remains my obligation. And when the first of the month comes, my obligation to my underwriter remains my obligation. So when I send the schedule, everybody has paid. When I send the schedule to my underwriter, everybody has paid, even if they haven't paid me physically. So the risk is on me, actually. What I find sometimes with some of the underwriters, it is as if we are criminals, we FSPs, and this is a blanket statement that, yeah, they might not have paid and so on. Please, I'm talking about myself here. I'm not a criminal. I understand my obligations and I discharge my obligations. That's what I just wanted to put on the table, that I appreciate this session and I hope that it is not the first one. We will engage more, the three parties now, FSP, regulator, and the underwriters. Thank you very much.
Thank you very much for those comments. We really appreciate your support, and we hope that you will attend many more of our sessions. We do have regular sessions, at least one every quarter, and in some quarters we conduct more than these sessions, and you're always welcome to attend them and to ask questions. We're going to be moving on to the next person. It is Letabu, sorry. Please unmute and ask your question.
Thank you very much, guys. I hope you can hear me. I think the question relates more to what the previous speaker had just also asked. What is the legal time period for renegotiating of the benefits we as parlours have promised to our clients? We find that parlours think that they are bound by promises they made 5 years ago. I would have been of the opinion that by law, we are allowed to renegotiate these benefits on an annual basis. Please confirm if my understanding is correct. Thank you.
Sidwell, I will hand over to you. I don't know if Sidwell or Zolani will take this question.
Yeah, thanks. It's a straightforward response to that. I think the speaker is correct in saying that his understanding is that this is reviewed on an annual basis. Again, this is contained in the PPRs of the Long-Term Insurance Act. But again, FSPs are not probably expected to know this, but he is correct, and I can confirm that this is reviewed annually, so they need to engage with the policyholder on an annual basis. Thank you.
Thank you very much, Sidwell. Litabota, I hope that helps. We will now move over to Vicky, and then after Vicky, Timothy, you will be next. So Vicky, please unmute your mic and take the floor. Vicky, the floor is yours.
Hi, can you hear me?
Yes, yes, I can.
Okay, I just want the regulator to explain a bit to us about the individual policies, seeing that group schemes are no longer classified as, or funeral policies are no longer classified as group schemes, so that we can just understand who is the owner of the policy. Is it the funeral parlour, the intermediary, or the insurer?
Sidwell?
Thanks, Zintle. I think I'll ask Shireen to come in on that one, and then I'll make follow-up comments, because I do understand that there has been that redefinition of the group policies, but seeing that the question also needs that clarification, and we do know that there's certain ongoing engagements that are taking place. So I wouldn't want to maybe give a comment at this stage around that, but I'll allow Shireen to lead the way, and then I'll come in after. Thanks.
Thank you, Sidwell. So, Vicky, the ownership of the policy is an interesting question. So the underwriter obviously owns the policy, for want of a better word, from an underwriting perspective, that they are committed to underwriting on certain terms and benefits. And obviously that would include certain exclusions depending on the situation. So from that perspective, they are the owner of the policy. But the individual policy holder is the owner of that specific individual contract between him or her and the insurance company. The FSP does not own the policy. The FSP becomes involved in giving advice to the policyholder before, during, and after the policy is entered into. And they will continue to be the giver of advice and provide intermediary services to the client as long as there is a contract agreement between the FSP and the insurer, and the FSP and the client. And that really explains why the word intermediary is used, because the intermediary sits between the client and the insurance company and assists both parties in the executions of their obligations, because we know that clients also have obligations towards maintaining the policy. But the ownership of the policy lies with the two parties, the client on the one side and the insurer on the other side, as long as the obligations are being met. I hope that helps.
Thank you very much, Shireen. Sidwell, I don't know if you want to add something. If not, we will move over to Siviwe.
Yeah, we can move over. I think Shireen touched on that, the ownership of that policy being with the underwriter. I think that's the item I wanted to add on, but that has been covered. Thanks.
Thank you very much. Siviwe, you can unmute and take the floor.
Thank you very much. The answer which you just given now, I'm not sure if she answers the question which I asked earlier on, because I wanted to find out if what protection do we have as funeral parlours to our clients which we have signed. But now her response that she gave now was that the client which has been signed by the funeral undertaker or the FSP, it actually belongs to the underwriter, and of which it seems to be unfair for us to go and speak for clients that we sign for our businesses. And now when we move to the other underwriter, because of the unhappiness that we have received from the previous underwriter, and then they start sending emails and communication and trying to steal your clients. Because I mean, we should be allowed, we have signed these clients, now we should be allowed to move with the clients to the other underwriter without them communicating with those and trying to steal those clients. That, because the question which I've asked before the break was based on that. The second one, how do we deal with a case where a client just recently signed with the FSP or the funeral parlor, and then 2 days after signing, without you submitting the details to the underwriter, and then one of the dependents passes on, or the principal member passes on in an accident, which we know the accidental period is 0. So what happens in that case? should the underwriter pay even though you haven't yet submitted the documents to the underwriter, or what happens in that case?
Siviwe, with your second question, I think that would be a contractual matter. Yeah, I mean, when you get into an agreement with your underwriter, then you would have the terms and conditions and what is it that you pay for, what is it that they pay for, what is it that they don't pay for. In connection to your first question, I would like Sharon to please take the first question.
Thank you, Zintle and Siviwe. So Siviwe, let's differentiate between the advice and intermediary services obligation. And that is the obligation that the FSP has with their client and also with the insurance company, the underwriter. In terms of whose client is it from a policy perspective, while the policy is active between the client and the underwriter, the client is the client of the underwriter for policy purposes. The client is the client of the FSP for advice and intermediary services purposes. When the client signs an agreement with you as the FSP, that agreement is often on the back of the application form with a specific underwriter. So the client says that I'm your client for this policy that is underwritten by underwriter A or insurance provider A. You can't just take the clients and go off to underwriter B because of whatever dispute or reasons that you have with not wanting to continue with underwriter A. The client hasn't given you a blanket approval. You must now go back to the client individually, and each client must individually give you approval to move that specific policy to a new underwriter. You as the FSP has the relationship with the clients, but you don't have the contractual approval to just go and move them whenever and wherever you want to. The client must every single time give you the approval to do that. So if you find that you can provide a better service to the client by engaging with underwriter B rather than underwriter A, you must go back to every client that you have and get their approval to move. And the new underwriter can only accept those clients when there is proof that the individual clients have given you consent to do that. And that is very clear in terms of both the FAIS legislation in terms of section 3 in brackets 3 of the General Code of Conduct, and in terms of the insurance legislation. Sitwell, I don't know if you want to just come in here, but Siviwe, that's how the relationship works.
You have covered it, Sharon. You've covered the points. Thanks.
Thank you very much, Shireen. We'll move over to J.D. Beer. J.D. Beer, we did give you an opportunity to ask in the first session. Can we just kindly allow someone who has not asked? I think Solomzi, we also gave you an opportunity. So can we just move over to Denton Goodford? And then we'll move over to VMesh, and then the rest of everyone that has their hand up, can you just pose your questions on the chat box, and then we will answer them there. Thank you, Denton, over to you.
Thank you, Zintle. I'm just wanting to get some clarity or give some information regarding what Shireen has said. There are many callers, I'm sure people on the call today who entered into group scheme arrangements with insurers prior to the new act. And subsequent to that, there were PPRs issued, and insurers were advised to convert the group schemes to individual policies. Now, there are thousands of group schemes that have not been converted by insurers to individual policies. And as you will know, under the old definition of group schemes, the book belonged to the intermediary / funeral parlour, and not to the insurer. And that is why under the previous definition of group schemes, the book was able to be moved by the intermediary to any insurer of his or her choice from time to time. Now, most insurers to my knowledge, have not complied by converting the group schemes to individual policies. And the FSCA is aware of instances like that of ourselves, where a High Court judge or two judges at this point in time have already disagreed with what Shireen has said now, that intermediaries are not entitled to move their books if they have group schemes and where the group schemes have not been converted. So I posted my question in the chat as well, and I would like to know, but I've already heard now from Shireen what the FSCA stance is on this. But I just wanted to point out that I'm sure that there are hundreds or thousands of intermediaries who disagree with this because they entered into contracts with the clients. And on the other hand, they entered into a contract with the insurer to provide underwriting for their group schemes. Now, the new definition in the Act since 2018, that couldn't just automatically have resulted in new contracts between the insurer and the clients. There's no provision for that. It's never happened like that in our history. And but it seems like the FSCA is treating it as if new contracts were created by the new definition in the Act. So I don't know if intermediaries and clients are aware of this, that they have now a relationship with the insurer, because they did not sign up or agree with the insurer on the policy. And in fact, many policy applications that intermediaries present to clients make provision for intermediaries being able to move the group scheme to another insurer for underwriting. So it's always been like that. And now we have the situation which is now going to the Supreme Court of Appeal, which is where we have to go to get back our book from our previous underwriter, who is now insisting that they basically own the book, in inverted commas. So it's going to be interesting, but it's been widely reported in the media for months already, since last year. But this is something that the FSCA should really have taken up with intermediaries before the change of the definition in the Act, as well as with the clients who amount to millions. And they have not been consulted. They have not agreed to enter into new agreements. There are, in fact, no agreements between these clients and the insurer. The agreements are still between the clients and the intermediary only. But you get now insurers wanting to abuse the new definition in the Act and claim the clients for themselves. Yeah, that's just from my side, and I hope that this will obviously be rectified soon, because it's a situation that I don't know is very detrimental to intermediaries as well as the clients out there. Thank you very much.
Thank you, Denton, for your comments. We can't comment on any ongoing litigation. So we are also watching this space to see what is going to happen, but we can't comment further on that. There is a funeral working group at the FSCA, and various industry associations are involved in that. And I know that the issues of where the policyholder rests and who should be communicating with policyholders are ongoing themes in that. As there are more information coming out of the working group, then we will be communicating that to the industry as well. So if you have any questions that you would like to be included in the discussion so that clarity can be provided, you're most welcome to contact us. You've got Sitwell Francis's details. He works in the micro department, and they are taking the lead on the funeral working group. So thank you for your comments. We do take note of that. Zintle, I think we've got time for one more question, and then we're going to take a break before we go into the beneficial ownership situation.
Thank you very much, Shireen. Looking at the time, now it's 11 minutes past 11. So I'm going to ask that we take a 5-minute break, and then I'm going to ask everyone that still has their hand up to post their question on the chat box, and then we will attend to the questions verbally, depending on the time, if we finish early. But now we are going to be on a 5-minute break. Thank you so much. Welcome back, everyone. I'm sure you've had a 5-minute leg stretch. You've got your water and maybe grabbed tea. So now this is the final stretch of our session, and we will now hand over to Akashan, who will take us through the beneficial ownership. And I can see that we still have hands. I did mention that. Can we please lower our hands and maybe pose our questions on the chat box, because now we've moved to another section. If time allows, then we will open the session for more Q&As after Akashan's session. Thank you so much, Akashan. Over to you.
Hi, good day, everybody. Thanks, Sinclair. Okay, so I'm going to be taking you guys through the collection of beneficial ownership information. I'm just going to share my screen quickly and go to my slides. Okay, so on the 6th of August, 12th of August, FSCA published Information Request 6 of 2022, requesting authorized FSPs to submit the collection of beneficial ownership. And this was recommended by a global watchdog company called FATF. So I'm not going to go into too much of who FATF is and what they actually do. More of that can be read in the communication, and my colleague Sinclair will post a link in the chat where you can download that communication that went out, and it explains who FATF is and why we are actually requesting the beneficial ownership. Right, the beneficial ownership is applicable to all FSPs, and we have put in some exclusions for FSPs that do not need to submit as beneficial owner, and there are the banks, the mutual banks, and the insurers. These are regulated by the PA, so we will be in consultation with the PA to get the information that we require. FSPs that are authorized for non-life insurance or health service benefits products only, that's if the FSP is authorized for 1.2, 1.6, 1.16, and 1.23. If you've only authorized for those products, you're not supposed to submit the beneficial ownership. Sole proprietors are excluded from beneficial ownership because you are the sole owner of the business. You are basically the FSP. You are the natural person owning this FSP, and the ultimate outcome of beneficial ownership is that we want to know who's the natural person owning the FSP or the company. Partnerships are also excluded because when you applied for the license, if you applied for a partnership license, the partnership's information was disclosed when the license was applied for. All right, one of the mandatory documents that are needed is the organogram. All right, this is what an organogram will look like. This is just a picture of how you can draw your organogram if you have different layers of ownership in your business. If you have a simple structure where it's just yourself owning the FSP, if you're a company or if you're a CC, and if it's just yourself that's owning the FSP, your organogram can look something like this. If it's just two natural people that's owning the FSP, obviously you'll have another block on the side of this one here with the other natural person's details, and then the regulated entities details will follow at the bottom. Okay. We've also put together a step-by-step user guide that is hosted on the website. When I go to the portal now, I'll show you where you can download that user guide, and then it will take you step-by-step and show you how to capture the information in the portal, how to upload the organogram, and where you can even check the compliance of your submission. All right, I'm going to take you through the e-portal now and show you guys how to actually capture this information. I'm just going to log on to our test environment and show you step by step on what you need to do. So on the homepage of the FSCA website, you'll go to regulated entities, you'll go to FAIS, and then you will click on the FAIS e-portal, right? When you get to the FAIS e-portal page, you will be asked to enter your ID number and password. This ID number that needs to be entered here can be the ID number only of the key individual of the FSP or the compliance officer of the FSP. We've received numerous requests from FSPs where a director wants to get access to the portal because he's the main shareholder in the business and he wants to submit the information. Unfortunately, if he's not appointed as the key individual, access will not be granted to him. Okay, the hyperlink to download the user guide for beneficial ownership is here on the top above ID number. So if you click on that, it'll download the document in a PDF and then you can read through the document. So I'm going to log on to the portal quickly.
We are not seeing your screen. Sorry. Vmesh, I think maybe you need to refresh your page because we can all see it. And we will continue. So you can maybe refresh and then rejoin us. Thank you so much, Akashan. You can go up right ahead.
Thanks, Zinhle. Okay, so once you log on to the e-portal, you will select from the bottom, it says beneficial ownership. You will click on that and you'll click on submit. Okay, you now come to the landing page of the beneficial ownership on the e-portal. Again, the hyperlink is on the top. So you can click on that to access the user guide. Sorry guys, I'm just hearing an echo. I don't know if Vmesh, if your mic is muted. Okay, thank you. Okay, so on this page over here, it will show you the regulated entity at the top. This is the information of your FSP. All right, so it'll give you your FSP number, your name, your company registration number, and the legal entity of your company. All right, or your CC, it'll tell you it's closed corporation, company, or trust, or whatever your legal capacity is. All right, to start capturing the information, you need to click on new ownership record on this level. Now, when you click on new ownership record on this level, you will then select the legal entity type that is owning your FSP. So you can see we've got various options that you can select from. So let's say you're the FSP and you've got a closed corporation that's owning a share in your business. They're owning 50% of your business. So you can put in the information there to say that this company is owning 50% of your business. And you'll have to indicate the date the company owned this percentage, and then obviously the jurisdiction as to where this company is based. All right, so one of the common problems that we've experienced when beneficial ownership started is that, let's say, for example, this is the company here, the regulated entity is the FSP, which is the company, and then when the people capture the ownership of the company, they go again and they capture the same information over here to say that this is the company and this is the ownership of the company. But then you get a message on the top of the screen here that says the registration number is identical to the regulated entity. So what you're trying to tell us is that the FSP is owning the FSP itself, and that's not what we want. We want to know who's owning this FSP. So if you went, or when you applied for your license, there could have been a point in FSP form 3 where you said you've got company ABC owning a 50% and you've got a trust owning another 50%. But when you have not gone the further level of telling us who's owning company ABC and who's the beneficiaries and the trustees of the trust. And now that's what beneficial ownership is doing. It wants you to give us that information because we need to get right down to the natural person's level. So once you've captured all this information, you'll click on submit new input. You'll go back to the main screen and it'll show you, now you're showing us that test without CO is owning 50% of this regulated entity. All right. So let's say that was the company that's owning 50%. Now let's say you've got a natural person that's owning the other 50%, which is yourself, right? So you can put in the information of yourself that's owning 50% of the FSP. Then you select a role to say you're a shareholder. You can put in your 50% here. The date you obtained the license, obviously that will be when the license was approved. Okay, and then your cell phone number you can put in your email address, your nationality, your country of residence, and then whether you're politically exposed or not. So then we submit. All right. Now that you see we've gone to 100%, your first level ownership has to be 100% before you can move over to the next level ownership. Now you need to go down further and tell us who's owning this first closed corporation here. And by doing that, you will click on next level ownership. And then it will move to the next screen, and then you'll follow the same steps again. So we see we already have information. I'll delete the record. Let me go back. So test without CO is where we need to disclose the next level ownership. So if you click on that, you will move to this page where you see the related entity, which was the company that's owning 50% of the regulated entity. So now you need to give us the ownership of the related entity. So again, you will click on new ownership record on this level, and then you will follow the same steps again and indicate who's owning this company. So let's say, for instance, here we have a trust that's owning this company, right? As you can see, we've made provision for foreign trust and local trust. Again, you'll put the percentage. Let's say this one's owning 100%. And then again, date obtained, and then country of jurisdiction. And then you submit new input. Now you indicated that the trust is owning 100% of the related entity. But you need to go a little further now and give us the ownership of the trust. So you need to tell us who's the trustees and the beneficiaries of the trust, because we need to get down to the natural person's level. That's where it will stop, and you won't go any further than that. Now, from second level ownership going down, we have put in an exclusion where we say that you don't have to reach the 100% if you meet these this criteria here. And one of the criteria that has to be met is that if there's any natural persons that are not owning less than 5%. So any natural person owning a share of less than 5% from second level going down, that does not need to be disclosed. So if you have any natural persons on the second level going down that owning less than 5%, and you can't, let's say, for example, you've got a company here that's owning, let's say, 50%, and then you've got another company owning 20%. But you need to go down on those companies and give us the ownership level. All right. But let's say you don't reach the 100% on the top because you've got the other 10% that's supposed to take you to the 100% is made up of natural people owning less than 5%. That is where you tick this box. When you tick this box over here, it will allow you to open up and go down further. Okay. And then once you've done that, then you need to upload the organogram for us. So uploading the organogram, it's a simple process. It's very similar to how you use the platform to upload your financial statements. You will click on attachments. You will click on add new attachment. You will click on choose file. Then it'll open up your computer. So wherever you saved your organogram, you select the organogram, you pull it through, it will show you the Annexure 1 test document, and you click on Upload Attachment. When the attachment is received successfully, it will show you the date that you uploaded it, and it will appear like this on the screen. Then you know the attachment has been received successfully. Right, once you've done uploading the attachment, you will click on Back. Okay, and then you can click on Back to go right down to the first page. All right, and this is where we started. All right, once you've done that, just to ensure that you have 100% submission with us, you can click on Compliance Report. It will download an Excel document for you, and it will show you the level where you're not compliant. Now, where you're not compliant, we're looking again for the natural person's level. If you have not gotten down to the natural person's level, it will tell you there that you're not compliant on that specific level. Okay. The other thing that we have developed on the e-portal is the Excel spreadsheet, but there's a lot of confusion around the Excel spreadsheet. If you have captured this information on the top, like I just showed you guys, please do not load the spreadsheet. This spreadsheet, if you load it, it will replace whatever has been captured on the top. So if you got one more entry to make, it's best that you do it on the e-portal. If you're going to do the one entry with the spreadsheet, it's going to remove this information and it's only going to show the one entry. The spreadsheet has also been designed for your larger FSPs where they're doing bulk uploading, meaning they're going down 3 levels, 4 levels. Some of them have maybe 50 shareholders or something. So that is what the spreadsheet has been designed for, to enable the larger FSPs to take it off the e-portal, sit through it like a week or two, get all the information that is required, and then then upload the spreadsheet. All right. Once this information is received by the FSDA, the system will then look and see what has been submitted to us. All right. And then we will send you a confirmation email. All right. There's 3 types of emails that go out. One will tell you that you've completed the submission. All right. The next one will tell you it's partially submitted. Read the content of that email. The email will tell you partially submitted because you have not gotten down to the lowest level of ownership. Lowest level of ownership meaning natural person's level. All right. If there's trusts in the ownership levels, please ensure that the trustees and the beneficiaries are captured. All right. The third email will go out again. It's a partially complied email. It'll go out and tell you that you partially complied because your organogram was not uploaded. So you can go back and upload the organogram. And then the fourth email that goes out is just a reminder to the FSPs that have not submitted the beneficial ownership. Okay. I'm not sure what the audience is like, but one of the common problems that we are currently facing is that where the FSP has ended on a beneficial owner that is a listed company. Right now, with the listed company, we do understand the challenges around it. We've had internal discussions and we have found a way forward. We're just waiting for final sign off, and then we will communicate with the affected FSPs. All right. We also found that there's a challenge around the trusts, all right, where there's various different types of trusts, where you've got an employee trust or where you've got a charitable trust and so on. Again, just capture as much information as you can capture, and then we will obviously send out again communication to the affected FSPs after we've looked through the data. Okay. Yeah, and that's it from my side with the process of capturing beneficial ownership, and we can now open the floor for questions.
Thank you very much, Akashan, for the insightful session in connection to the beneficial ownership. I see here that we have a few hands. I'm just waiting for my system to quickly load so that I can see who raised their hand first. I'm going to hand over to Sami. I'm just going to quickly give you mic access, and then you can unmute on your end and then take the floor.
So much, Akashan, for an insightful session. I've definitely learned a lot, especially with the portal as a youngling in this industry. I just wanted to find out, when we look at, in terms of uploading our beneficiaries and shareholders, let's say now these beneficiaries are under the age of 18 or not legal, how can I put it, they're not legal adults. I just wanted to find out with these people or these, let's say our children, okay, let me just be direct. Our children and whoever want to put, and other shareholders as well, would they have to go under something like a trust, or do you guys have like a benchmark whereby you say you cannot have a beneficiary or shareholder under a certain age? I'm not sure if that's clear.
No, we have not set a benchmark. So, but what we will eventually do is we will eventually pick up the minors based on obviously the identification numbers. And then we will obviously maybe engage the FSPs going forward from there as well, on a separate note to find out what's going on about the shareholding and stuff like that. Okay. But for now we have not set an age on the shareholders or beneficiaries that need to be disclosed.
Perfect, Akashan. Just to clarify, so it would be safe for me using the e-portal to have them added, for example, on third level,
Yes.
as we're going through.
Yes.
Okay, perfect. Thank you so much.
Okay.
Thank you so much, Sami. Thank you, Akashan. We'll now hand over to Moridi. Moridi, okay, your mic has been enabled. You can just unmute on your end and then take the floor. Moridi, the floor is yours. Okay, Tebogo, we have enabled your mic. You can unmute on your end and then take the floor.
All right, good morning. Thanks
Good morning,
for the session. I'm just a bit curious. So my business is a sole prop. It's been running since 2015. But now I had looked into changing it from a sole prop to a PTY Ltd. My biggest concern is that why would the FSC now want us to literally drop the, well, they basically say suspend the license and actually start a new process. And that process is a bit costly because now you have to get a compliance officer in, and then there's monies that need to be paid. Why doesn't the FSC facilitate a process where we can just basically transfer over the existing license onto the PTY Ltd? I'm just curious. Thanks.
Tebogo, let me just quickly jump in there. Unfortunately, it's not a call that was made by the FSCA. If you can recall, when you registered your company under CIPC, you said that you want to open a sole prop. So when you want to open a PTY Ltd, you unfortunately have to start from scratch, and then you have to make a new application again with the FSCA. So it's not a call that was made by us to allow for a diversion from sole prop to a PTY Ltd. So maybe you can engage our the CIPC division when it comes to that. But then when it comes to us, when you want to open a new company, you have to start afresh in an instance whereby you're a sole prop. Okay. I see here that there's a colleague of mine that wants to come in. The floor is yours.
Hi. Sorry, was the question posed by Tebogo?
Yes, it was.
Okay, Tebogo, just to help you understand there as well, is that you are now moving from a natural person to a legal person. So when you are a PTY, you are not seen as the same person that you are as a natural person. So as a natural person, we would have used your ID number. The PTY will have its own registration number. So that cannot be something that is easily converted. Whereas if you're converting from a closed corporation to a PTY, it will be the same legal entity that is just converting to another legal entity. The details of the entity will be the same. The only thing will be the type of entity that it is. So the distinction is that you are moving from a natural to a legal person, and that is why it cannot that is why you cannot keep the same entity. Now, unfortunately, that is the cost of actually incorporating yourself as a legal person. There are also additional requirements that you would have from a Companies Act perspective. So it is important that when you make that decision, you have accumulated enough resources to be able to handle that. And unfortunately, there's no getting out of that. However, even as a company, if you are just one person, remember, if you're a sole prop, you're not required to have a compliance officer. It's not mandated. It's not enforced if you don't have any other people or any other representatives in the entity. If you still are going to remain a company or a PTY that is a one-member band, meaning you're the only director, the only shareholder in that entity, representative, and key individual. So you're a one-member band. There are no other people under your FSP. Then a compliance officer may not necessarily be enforced on you. However, you may need a compliance officer in the interim in helping you set up and making sure that you have all the legislative requirements in place from a Companies Act perspective, as well as from a FAIS Act perspective, because there are certain requirements that are required of you from a legal person perspective that you may not be aware of. And it's better that you get the compliance rights at the beginning, and then in the end, you may just choose to be your own compliance officer.
Thank you so much, Sandy. Timothy, I hope that helps. We will now move over to Moriti again. Moriti, we did give you an opportunity, so you can just unmute and take the floor. Okay, I will move over to Njirile, and the reason for that is that MNCE, we gave you an opportunity. Solom's, we also gave you an opportunity. So let us hear, let's get an input from new hands, and we will also give you an opportunity should the time allow. Njirile, apologies if I'm pronouncing your name incorrectly. You can go ahead.
Good afternoon. Good morning, still morning. On the beneficial ownership, I got a compliance status that say, or compliance report that says the lower level is not updated. And when I go into the portal, the only thing that is showing that needs to be corrected is the attachment for the organogram, which when I open it's showing this. So I don't know if I'm doing something wrong there.
Okay, you can just post your FSP number in the chat, and then we will look at it and we will get back to you.
Okay, thanks.
Thank you. Moriti, you can unmute and take the floor. Moriti, please unmute and take the floor. Okay, we will move over to Ompemeti. Ompemeti, you can unmute and take the floor.
Thank you, Zintle. My question is with regards to the collection of information. So why did the FSCA opt to ask FSPs to give them information about the beneficial ownership and not significant owners? Is there a particular thing that they were, a particular objective that they were hoping to achieve, or I'm just in need of clarity with regards to that?
Ompemeti, can you just quickly just give us your question again?
Oh, so there's noise this side. So my question is, why the request for information on beneficial owners and not significant owners? Because I know there's a difference between beneficial ownership and significant ownership. So I just want to understand why the request specifically for information on beneficial ownership and not significant ownership.
All right, thanks, Mpemezi. I will hand
Thank you,
over to
Zintle.
Shereen.
Thank you very much for that question, Mpemezi. So the beneficial ownership requirement for us asking that information is driven as a result of the Financial Action Task Force, and that is the international governing body for anti-money laundering and anti-terrorist financing activities at country level. So they, one of their requirements is that countries must have a very clear details about beneficial ownership of all entities that are regulated in terms of the FIC Act. So if you look at Schedule 1 of the FIC Act, all entities listed there, we must, as the regulators, actually have details about the beneficial ownership. And that's what drives that specific requirement. The significant ownership that you are referring to is driven by another set of requirements, and there is a joint standard one that was recently published, and it's a joint standard between the FSCA and the Prudential Authority. We normally just use the abbreviation, the PA. So the FSCA and the PA is driving Information Standard 1 or Joint Standard 1 on the significant ownership. So there isn't a questionnaire for that as such, but there is an obligation on entities to notify us of any changes in significant ownership. So that is a profile change. So you would submit a profile change, and in your subject line, make it very clear that it is a significant ownership update that you are submitting to us. And you would be using the relevant forms. I think it is Form 4 for the license applications that you would be using to provide us with the details of the significant ownership. You would submit that as profile change process, and we would then update it. The guidelines for significant ownership is when a shareholder holds 15% or more shareholding, they are regarded as a significant owner. You would have noted from Akashan's explanation of the beneficial ownership that there we are going down to a natural person level. So we also just simplify that and call that the warm body. So there is a difference in requirements. So the warm body could also be a significant owner, but it's not necessarily exactly the same. I hope that I've clarified this for you.
Yes, you have. Thank you so much, Shereen.
It's a pleasure. Then I think, Irfan, you are online to go ahead. So I'm going to hand to you and you can unmute.
Irfan, I think you are muted. Can you please unmute and take the floor?
Yes, thank you. I'm unmuted. My question, I have two questions. One, will we receive the slides of this presentation? And two, there was a presentation a couple of minutes ago, but we couldn't see, there was nothing appearing on our screens, and everybody complained we can't see the presentation.
Irfan, thank you very much for that. Can I just quickly come in here? So we will be posting the slides as well as the recording of this. So the slides will go onto the FSCA website. We will let you have the links of where we posted the slides. And then the webinar itself will be hosted on the FSCA YouTube channel. We will also let you have the links for that. So we will send out one communication with the access details for last week's presentation on irregularity reports, as well as this week's presentation on funeral parlours. If everything goes well, you'll get this as an early festive season present from us, and you'll get the details before the 20th of December if we can manage to do that for you. And we'll send you a communication with the links. And you should also see the presentation that you are referring to in the YouTube channel. Unfortunately, from our side, it was visible, so we don't know how to rectify it from your side, but it did record, so it will be showing on the recording as well.
Thank you very much, Shereen. Efren, I hope that helps you. We'll now move. Oh, sorry. Yes.
Sorry. I've also asked, what's the lady's name that's been answering my questions? Tandiwe. I've asked Andiwe a question. Can she perhaps just elaborate on that question?
Hi, Irfan. I hope I'm pronouncing your name correctly. I was busy responding to the question that you asked. So no, the fee that we are talking about, remember there's a distinction, and I'm not sure if you're a funeral parlor that conducts funeral processes as well. So remember, if you're just an intermediary between the client and the insurer, the fee that you receive is not one that you will get from the client, but the insurer. So you will receive commission income for that. You are not permitted to charge the client again on that same service. So for the intermediary portion related to the financial service, that will be paid over by the insurer, not the client, because if a premium is already stipulated, the premium is now handed over to for the financial service is handed over to the insurer specific for that cover that they are insured for. The other fee that I'm referring to, remember with traditional funeral parlors, there's the actual funeral procession that they provide the service on. There's a package that includes a box and many other services and the people who will be assisting with the funeral processions. So you have pallbearers, you have tents, you have chairs, you have catering that is offered for those communities. So that's a different model altogether. For that model, those funeral parlors need to have a service or a service fee or a pricing that they attach to that particular service that is separate to the financial service. The financial service, that is where the client, because that's where the confusion lies. That is where the client is the client of the insurer for that particular financial service, and the FSP acts as an intermediary, right? However, for the funeral business, for the actual procession, that is where you need to then price what your service is, because remember the stuff that's being paid. There are so many other things that are going in there. The costs of traveling to the cemetery and all of that. That is what needs to go into that pricing. So I hope I've made it clear now.
Thank you very much, Tandy. Ifran, I hope that helps. If you would like to engage Tandy more, you are more than welcome. I will now hand over to Ben and close off with Moriti because we had booked from 9 till 12. So Ben, the floor is yours, and then I'll close off with Moriti as our last person to take the floor. Thank you so much. Ben, over to you.
Thank you so much. I hope that Shireen or Akashan can assist me. My question on the UBO completion of the register is that the FSP is owned by a public company, and that public company is in turn owned by hundreds of other companies. What do I do in that instance? How do I capture such a large amount of shareholders in that public company? I noted that you've mentioned earlier on in the presentation that you need to go down to the natural person level, and anybody that's owning less than 5%, you wouldn't need to capture essentially. But what if you get down to the level where it is companies that own, a percentage or less than 5%? Does that still apply then, or do you still need to capture those companies even though they would own less than 5%? I'm just thinking from a practical perspective. It's a mammoth task to capture hundreds of companies on there and to actually obtain all of that information. I hope I'm clear in the question and that you can provide some guidance. Thank you.
Okay, thanks for the question, Ben. Okay, so if that public company is a listed company, then I did mention that we are aware of the challenges around that, and we're just waiting for sign off, and then we will communicate on a separate level to those affected entities. However, if it is a company that's owning less than 5% on the lower level, all right, that company still needs to be disclosed. The less than 5% rule only applies to natural people.
Okay, thank you. The public company is not a listed company though, so yeah, therefore
Okay.
it's a mutual company. So the ownership sits with other smaller industry related companies, and yeah, there's literally hundreds and or perhaps even into the thousands of those companies.
All right, Ben, I will post my email address in the chat. If you can just drop me a separate email on that, and then I will put this on our table when we have our project meeting, and then hopefully I can give you a better direction that you can go in.
Thank you.
All right.
Thank you very much, Akashan. Muriti, the floor is yours. You have 1 minute and 30 seconds. Sorry for rushing you, but as I mentioned, we are pressed for time. The floor is yours. Muriti, I have given you mic access. You can go right ahead and ask your question. Okay, Muriti, we have tried our level best. You can post your question on our chat box. I would like to thank everyone who has joined us today. We really do appreciate your attendance and for making this session very interactive. Thank you to the presenters, and we wish you a Merry Christmas and a safe, Happy New Year. And again, I'll just have to reiterate that we will post the presentation on our FSCA YouTube site, and then the slides will be posted on the FSCA website. Thank you very much.